Well, it looks like Obama did what he had to do to get his votes for the healthcare bill to pass. Basically, he struck a deal with the Republicans that were against abortion. So he cut a deal with them, probably something to do with some pro-life agenda, and got the 216 votes to get the health care bill through. Now, the initial effect on this market is going to be negative, just because of uncertainty that comes along with a new bill that gets passed. But time will tell what the long-term effects of it will be. It seems to me like there's a lot of taxes that are going to be taken out of investments and stuff like that. So it should probably will have a negative effect long term on the market too. Okay, here's the S&P futures. You can see right away when they opened, they gapped down and had a nice run lower. We did break the low of Friday for briefly, and I would expect them to stay somewhere in this range here until the open of the real market on Monday morning. Now, the S&P did basically exactly what we said it was going to do. Here was the day of indecision. Here is the first day down, and Monday morning will probably be a follow-through day to the downside. No, it depends on we're not exactly sure how big of a down day it's going to be, but I would imagine it'll come down to 1150 for sure. It'll probably have a little bit of trouble at that point. So we're staying in our short ETFs, hopefully for a follow-through day. And if we don't get a follow-through day, then we still would need some consolidation in this area if we're thinking about anything bullish. So if we don't get a follow-through day to the downside, then we're looking for another day in this consolidation range. I would not expect a move higher, but if we do get that at this point with the news that came out, that'd be kind of a contra event. And contra is basically if you have some bad news come out on a stock and the stock actually moves higher, that's contra. And you would want to get with that move because there's obviously some institutional buying in that because the news was negative. So if we do end up breaking these highs, which I don't think is likely, then you would want to get with that move because that's institutions likely buying it, and the general public is getting out of it because of the bad news. Okay, on the 10-year note yields, remember we're looking for a break likely down from this wedge, and I really think it's going to go Monday now for sure. So should break one way or the other. I think it's likely to break down, especially with this news. People start flocking into treasuries, and that'll cause the yield to come down. But if we don't get a breakdown from here, we do actually get a break higher, then that's another contra, and then we're going to want to get long this market. I don't think that's likely. Alright, the volatility index bumping up against this resistance here. Essentially, this is a bullish engulfing here. And I'm not gonna be fussy on that it didn't quite close up here, but essentially that's what we've got here: bullish engulfing, and likely to have at least a follow-through day, if not completely change direction for a while. I wouldn't be surprised to see this up at 20 in the near future. Maybe bounce around a little bit here in this area between 20 and 19, and then make another leg higher later. Alright, here's the US dollar. Basically, we've got a bull flag going, and it just broke the top side. So we're looking for minimum matching the highs. Okay, here's the euro over the US dollar. So when this goes down, basically it's showing strength in the dollar, weakness in the euro, or some combination of both. And we got our open is at the lower end of this range. A lot of the other indices are doing the same thing. The New York Stock Exchange basically put in a hammer and pushed lower on Friday. The Dow Jones Transports put in a key reversal. You've got a pretty strong white stick followed by a matching red stick of the same. It's essentially similar to hammer-amy or a bearish engulfing. Here's the Dow Jones Transports quick. Here's the key reversal. You've got your strong up stick followed by your strong red stick. It is actually a bearish engulfing because the body is a little bit bigger than the body here. So likely a pretty strong move lower from here near support 4250 area. Beyond that 4150, and beyond that light support, and not a whole lot in that area. So some key levels to look at. This one really isn't moving any faster or different than the other indices at this time though. Here's the Dow Jones. Like I was talking, we ended up with a high wave, which is a candlestick where you got your long wicks on each end with a kind of tight body, and it shows that there's a really basically a big battle between the bulls and the bears. The bulls pushed it higher, bears pushed it lower, and then they end up meeting in the middle somewhere. It's a sign of indecision, and after a long run higher like this one here, it's a strong sign that it's about to change direction. So likely a move lower. We got some support areas in here, but not a whole lot after that, just like the other ones. So we need to find some support here above 10,400, or we are basically done.